All right, so next topic is the gap fill, one of the biggest money making machine. Oh my god, this is one of the coolest things that happens and exists in the stock market. The gaps. So notice here there is this huge gap between the candle. And normally a gap happens when a stock price opens significantly higher or lower than its previous closing price, leaving a blank space on the chart. Now, it's common during overnight sessions, earning reports, news releases, or major market events. So, what does that mean? Let's say this is the stock, this is the previous day, okay, and all of a sudden, next day before the market opened, there was a huge news regarding the stock. Maybe the company had some bad earnings or whatever the reason is, but it's something bad, which is why the next day the stock opens right here, and there's a huge gap, which the price never traded forms. Now, usually what happens is that when there's a gap, sometimes it when the market opens, it immediately fills this gap and then continues down, or it takes a while and then it comes back up and it fills the gap and then continues down. Okay. Nevertheless, a lot of times the whenever the gap is, the stock comes up, fills up this gap with the price action, and then continues on the same direction. The reason why it's so important is because you know whenever there's a gap, you know there's a good chance someday the price will come in this year, so it's a good price to short the stock and bring it back down. And if you don't know about shorting, we will talk about shorting, but basically just making money when the price goes down. So let's look at here. um, we talked about because of it happens due to sudden news, earnings surprises, markets moving events outside regular hours. Okay. So what's the market psychology? Basically, why the normally the price gap does a gap fill? Well, because traders see the gap as unfinished business. Okay, price often revisits that level to test if the buyer seller is truly supported. A lot of times because of profit taking. So traders who rode the gap down may close positions and pushing the price back towards the prior close. So what does that mean? So for example, let's say that if I was short on the stock right here. Next day the stock opened and then boom is right here. I'm up huge green. I would want to take profits, so the price pushes back up because of that. Okay, so we're gonna look at live examples. Let's quickly run through the theory real quick. I don't want to bombard you with too much theory. More practical is better. So let's look at this chart. Example. This is the price. I just looked up a chart of J&J, which is Johnson and Johnson. Okay, very famous company. And this is a daily chart. So each candle represents one day. Okay. Now notice here, there's a gap right here. So the price came down to this level and then opened the next day. It opened up around here actually. Okay. And then it continued down and it formed this gap right here. There's a brief gap where price did not trade it. Okay. Now eventually the price normally comes up and then fills this gap with this price action. So what happened here? The price comes down and boom, comes back here. If I draw a line, look right here. Look, here it is. It fills the gap, then it goes back to the same direction where it came from. You see how it fills the gap? So let's look at a couple of more examples. Here's another gap. Okay. Here's another gap. Okay. So now again, right, like I said, if you draw a line at the gap area, look, the price fills up and then continues. Okay. Here's another gap. And here there's no chart, but there in actually later on the price did come down and fill this gap. Look, all the gaps got filled. How? Notice here this gap right here. What happened? If I draw a line straight, it came up and it filled this gap price. It filled this price action filled this gap price, right? Let's look at this box, right? This action, this gap. What happened right here? If I draw a line all the way, look, it came down to fill this gap. So this price action got filled by this area, this price action, right? And then it continued. So it comes down, fills the gap, and then continues. Let's look at more examples, like clear examples, recent examples. So I'm gonna open up a chart and let's look up Tesla. So here's a 15-minute chart. So this is the 15-minute chart right here. Okay, each candle represents 15 minute, and this is one day, this is another day, this is another day, and this is another day, and this is another day. So this will be 1, 2, 3, 4, 5, 6 days in this chart. Okay, now notice here what happened. Notice here what happened. The price had ended on this day, it closed here. Next day it opened up here, causing this major gap. You see this clear gap right here. Okay, see that? Now, if I draw a line from this gap area where the gap started, look what happened. In a day or two, actually one day, the second day, the stock came and price came and filled this gap. So this whole area got filled by this price action, and then it stayed down. Now this same gap fill area turned into resistance and boom, down. So basically it's a gap fill. The price, we call it a gap fill, which basically means the price filled this gap and then continued the same direction. What's the direction? The direction was down, so it gap down. So it comes up, fills the gap, and then goes down again. Okay. Now here's another one, real quick. Actually, you don't realize it, but notice here. This day, the price opened. There was a gap right here. There's a gap. Okay. What happened? The price opened, filled this gap right here. If I fill the lower line, it filled this gap and then continues from the same direction where it came from. So in this session, the price had gapped up, comes down, fills the gap, and then continues up. So once we make a strategy and go talk about the gap fill strategies, this is gonna be really helpful. Okay, so to understand, I actually took this trade right here the other day. I had my order sitting here to buy. As soon as the price comes up, fills the gap, and then boom, take profit on the gap fill. So we'll talk about it in the strategy section, but I just want you to understand some of the basics of technical analysis. The gap fill is very important. Let's look at one more, just to because there's so many different examples we can talk about. Okay, wow, this is a very tiny one, very interesting one. Okay, so PLTR. So notice here there's a gap, very teeny tiny gap. You see this teeny tiny gap? Look what happened. Actually today it came down exactly to the fee filled, and then boom. You could have, if you knew the gap fill strategy, you could have literally had your buy order sitting right here. As soon as the stock comes down, stock opens here, comes down, fills the gap. You already had this line drawn with a gap fill line. You would have had your order sitting right here, and boom, catch a huge move. Okay, could make your months. We can go on and on and on. Here's another one that happened today. I actually had this line drawn, you see, before the market opened. So there was this, the stock was gapping up in the pre-market area because of some news. Okay, it closed here, it opened here, comes down, which is here, comes down, fills the gap, and then continues up. Okay, so very powerful strategy. Go ahead, go through tons of charts, especially on 15-minute charts, and see where did the gap fill and how could you have entered it. We're going to talk about trading strategies later on, but look at the gaps and see what happened. So this will give you a lot of screen time experience and really help with when we're going to talk about trading strategies.